Welcome to Trading Lounge and the US Indices report, and we'll look at the S&P 500, the DJ and the NASDAQ and Apple, because we've been working on Apple as well in this section. Now, the textbook thing, as you know, is that we have wave 1 up here, and we're looking for textbook and basically an A and a B and a C back into wave 2 here, and then wave 3 moving up here. Now, we noted that the corrections in wave 1 and 2 were here and wave 4 here were both very shallow, so we're seeing a market that's actually sort of, trending to the upside. So we need to sort of have a bit of caution about how far this can actually pull back. So we're going to leave it there, as I've mentioned before, and we're also just going to observe what's occurring at this particular old highs here and this particular price point here. And but we have to be prepared for anything. We have to be prepared for the market can still climb, but we wouldn't be interested in new long positions. In fact, we haven't really put any long positions on for equity trades, CFD equity trades for the US and the UK, and pretty much for the Australian market as well, because we know we're sort of near a top here. There are some stocks that have got further to go up here. A good duplicate pattern of this in stocks is triple M, and that can also, it's down today, but it can also trip higher as well. So look, there's a lot of caution here. We're just in a neutral zone at the moment, essentially not putting any new long trades out, and no short trades just yet. But if we get a breach lower, then we'll hedge our long trades that we have left with some short trades. But we're just in that space at the moment in terms of observing what can happen here. Now, as you can see, the correction here is very small at this stage here, and through the NASDAQ, the Dow Jones and the S&P 500, we're just trying to figure out what we've actually got here. Each of them can have different counts, and we're going to look at 3 different counts today. On each one of them, they'll be a little bit different. But, I think that the main thing is that this wave 4 here, when a market doesn't have a 61.8% retracement level as a wave 2, then we always look to the wave 4 here. Okay, but as we know, as you can see, each trend, no matter what degree of structure, needs to be rebalanced via a correction, and this whole trend up here really hasn't had that correction. So yeah, we need to be sort of open-minded and just trade what we see, basically. So I'll just go to a 2-hour chart here and just sort of work on the top a little bit. This is the first sort of scenario that we're looking at, and just looking at this as an A and a B and C. We want to see the market come down at least to the wave 4 of 1 lesser degree here. I know it's sort of reluctant to, but and as it stands at the moment, it can certainly move up off this low here, because on the cash market it appears that this is like an impulse wave to the upside here. So as long as that low stays in here, then this can climb higher here. But even if it showed a move up here like it has already, and that appears to be in 5 waves on the cash market, then it can pull back 61.8%, basically where the current low in here, and we'll look at that in a moment, and it can move up to here. Now, that could be the B wave to here and then fade from that point. So I wouldn't turn bullish just because it popped its head up over this level here. It would have to establish a really strong tested support on this price point here before we went long. So I'm very happy to change my mind and trade what we see, and working off support is what we do on the long side. However, we're kind of expecting the market down here, so we need to sort of just give it some space to do that. And let's just go into the 15-minute chart here, and it'll be labeled slightly differently in terms of color labeling, but we'll get the picture of it. So from the top up here, we've been counting down here, and this is one particular count where we have 1 and 2 and 3, A, B, C for the 4th here. and down for the fifth here as wave A here, and then we're looking for a retracement back into roughly the 2100 here. So we've got that in play here, and then we're looking for a move down here. Now this is kind of important, this little bit. It's a bit subtle, but this current low here is the 61.8% of this moving up here. So if this becomes the retested resistance here, then you know that that's confirmation that we'll be moving down further from that point there. As long as this holds here, then it can move up from that point, okay? So it's kind of nice to know, and you know, it's not like you have to rush in and sell that point there, because any move down here will bounce off this level anyway. So there would be a three-wave correction here, and then down again. So sometimes it's best not to chase it. If you chase that, then you'll get caught back in here again. So you need to confirm things first. So this is sort of what we're looking at here on the Dow Jones chart. Once again, just a 2-hour chart. I haven't got this labeled here. We'll go to the 15-minute chart here. But once again, we're still expecting the market to come down, you know, to lower levels here. But at the same time, it hasn't actually let go of this number here. It's basically retesting it at the moment. And a retest is part of the process, but essentially we need to see it fail. So on the outset, a break through that low there would obviously, you know, trigger it lower at that particular point here. But also too, we can grab the 61.8% mark from this move up here and pop that in there. And if that becomes the retested resistance, then we also know it's going to move further down from that point. But even though it's under the level here as resistance here, so you wouldn't go long here unless you had support on top of 18,000, the closest largest number, which you always look for and work with. So it's under there testing it. We just don't know if it's going to fail just yet with this one. So this is labelled a little bit differently in here, and just as valid as well. So essentially in this case here, we've got from the high here, we've got 1 and 2 and 3, A, B, C for 4, down for 5 here, and then an A wave, a B wave, and a C wave here. And then looking for this market to work lower. Like I mentioned, this is the 61.8% mark from the move up through to here. So if that becomes the retested resistance here, then that confirms that we're going down from that point, lower from there, okay? And then we can start putting trend lines in and so on. But as it stands at the moment, really this here can be counted as it's a bit of a long shot, but an A and a B and a C wave here, then up for 1 here, back for 2 here, and then moving up through here as well. So as I mentioned, it's not worth going long unless you have the 18,000 as a nice tested support there. So the market can move up from here, and you know, we just need to get some evidence and confirmation on a few things, that's all. The Nasdaq is looking a little bit more bearish. So just on the daily chart here, we're just looking at this as the wave 3 here, the A wave, the B wave, and the C wave for wave 4, and looking up for wave 1, and the wave 2, 61.8% is further down here. Will it come down this far? I don't know, but you know, we have to put it there, and you know, and then work with the structure that we have here and see how we go with that. So if I just cut through to, I'll just cut through to the 15-minute chart because we're kind of up there in the moment here anyway. So with this one here, it's a little bit more bearish. So we've got this wave 1 here, which is sharp, wave 2 here, A, B, C for wave 2, and then we've got 5 waves down here for wave 3, and wave 3's, in stocks anyway, is 90% of the time is the extension in wave 3. And if the extension's in wave 3, well then wave 1 here and wave 5 will be roughly the same length. So I can basically see in this little move down here that it appears that we've got 1, 2, 3, 4, 5 here. So I'm thinking that we'll have a little ABC back here, and then down for 3, 4 and 5 here. Now the interesting thing here is that with Elliott, if you get 5 waves in the opposite direction, and remember the opposite direction, we've been moving up, so 5 waves in the opposite direction coming down here, if we get that, then we'll have an ABC correction back to the 50-60% mark, and then we'll have another 5 waves down here matching this 5 waves here. So to me, this is all a bit more realistic than the other markets, but we've got 3 different counts here, and we're just going to toy with them and see what comes out in the wash. So basically, if we do get 5 here, then we can look to, short over here again if you wish. You may already be short at the moment, but if you're short, then the 44 is the target here for this one, and the stop is above the 45 there as support. I'll just have a quick look at Apple because we've been looking at it and setting up for a trade on this one here as well. So as you know, we toyed with having long trades in here, nothing sort of officially, of course, but just sort of looking at it because we had a really nice A, B and C here, and we could see that that the market was going to move up from these lows here. But once again, we wanted to get a bit more confirmation, so it was really long at this point here, trading up to 110 and 113 up here. And then we were bailing and just waiting for the correction. And as you can see now, the correction is in full swing here. You could probably even say that it's sort of halfway in a way because we've got that first leg down here. So we'd still be looking for a leg back up and then a leg down again. So if I was wrong in this case, we wouldn't want to miss this wave 3 coming up here. So if this market just moves straight up here and found support on 110 here, then we'd go long from that point. But otherwise, we're waiting for this to be an A wave, a B wave, and a C wave down here. And then we also need to get confirmation on the 15-minute chart or hourly chart that we've got 5 waves up here. And if we have, then we'll get a retracement back in 3, and then we can start building into the trade from that point and start working the trade all the way up through these group ones here of 10, 20, and 30 and really build into that. But we need to collect the evidence, we need to get our timing right, and so on and so on. So a bit of patience to get things working well, and I didn't particularly want to short any of these because we didn't really know how far they're actually going to move down. We don't have any sort of target, but if you're trading, then that would be the side to be on, of course, but you already know that. So that's that, and thanks for tuning in. Cheers.